Hello traders, you are watching another chapter of Trading the Trend with Strong Week Analysis. I am Dennis, and this is going to be my July 2015 month-end report. I always like it when the trading month ends on a Friday. That gives us the whole weekend to look at a much broader look at the market and see where things are going, and also a chance to look at the month's trades and see where we went wrong and where we went right. Now what I have here today is I've done a spreadsheet showing the closing month strong week rankings for each month this year, and just to put things in perspective, and we see that the pound has been the strongest for most of the year. It's only had one, let's see here, yeah, just one month where it finished in the bottom half of the ranking. So the pound's definitely been the winner this year. We'll see how it finishes the rest of the year. Now let's look at some long-term charts and determine which way we want to be trading. Here is the weekly chart of the Euro US dollar. It's been rather choppy over the last few years. You've had big moves down, and then you have counter moves back up. The trend is obviously down. Right now we've had this very long downtrend, and we've started to move upwards. But it's been a very choppy move upwards. In the past, these moves up have been pretty clean. You get to a low and you just spike right up. Here, that really hasn't happened. I really had hoped to see the price move at least up here to the 1200 area. That would have been at a major point of resistance where you had support here, support becomes resistance once it's broken. So a move up to 1200 and rejection of that would have been a very powerful entry signal, but we haven't had that. What we've got here is more of a flag pattern, where you got your flag pulled down, and then this is almost like forming a flag as it slowly moves upwards. So unless we break above this level here, I would be looking for prices to move lower. If we break below this low here, then look out below. This definitely could fall for quite some time yet. And with the euro always having problems, any news event could drive this thing lower. So I'm always looking to try to have at least something short the euro. Now let's look at my next chart. This is the Aussie US dollar. And as you can see, we peaked up here back in middle of 2011, and then it's been in a downtrend since then. We stalled a little bit here, broke lower, and now we're definitely moving lower at this point. A test of this low from back in 2007 is certainly possible. That takes us down to 0.60. That's probably another, about 1,200 pips away yet. So there's still a lot of money to be made on the downside in this trade. And of course, we have no idea what it's going to do once it gets down here to 60. Just as we have no idea if it's ever even going to get that low. As long as the trend is moving in that direction, then we'll trade in assumption that it's going to get down there until we see some significant candle action that tells us that the move lower has ended. Now we'll look at the Euro Aussie. This is that one I've been talking about, this rather strange looking head and shoulders top with the double right shoulder. Remember, we had the double right shoulder down here in an inverse head and shoulders, and it worked out very well. And here we have a very similar pattern forming. I had hoped to have a real nice pin bar here on the weekly, but we finished a little bit off the low, so it's more of a doji than a pin bar, but it's still somewhat negative, especially since it's happening at the same level that it happened over here. certainly going short here wouldn't be a bad idea, with a stop just above the weekly high. If we can get moving, maybe get below this big blue candle here, then we should see some momentum pick up, and this trade really isn't going to be verified as a head and shoulders top until we break the neckline. The neckline is going to be below where we saw this low right here. So what is that, about 13,750 in that area will be the confirmation of this pattern. So if you get in now, you are getting in early, but there's a lot of pips to be made. If we come back down here, test this low, and then shoot back up, that would be a good place to take some profits if you did get in right here. And as you can see, if you're putting your stop here and you're shooting for down here, that's a huge reward to risk ratio, and that's the things that we're looking for. And then in my next chart, this is the current top strong weak trade we have. We have the pounds on top, and the CAD is our weakest. And this has been a beautiful rounded bottom that you got here. We were very negative for a long time with the pound losing ground against the CAD, and then it kind of stalled here. This goes back to 2009, and then it spent 3 years, almost 4 years, going sideways with no movement, and then suddenly it starts to pick up. It breaks above the 200-week moving average. It makes a nice move, moves sideways for a while, and it's starting to pick up some pace here. And we have no idea how much higher this is going to go, but if we were to duplicate this double top we had back over here in 2002, 2003, that's, what is that, 5,000 pips? That's a long ways, and there are lots of opportunities to make some money, even if it's kind of a jagged move up. Buy the pullbacks and then take profits as we break the new highs. That's the way I play it, and that is going to be it for this weekend's edition, and I'll be catching y'all on my thread. Talk to you later.